Hi folks, Scott here, and this is the wrap for Monday, August 5th. So, not a whole lot went on today. We ended up with a real narrow range day. Man, this is pretty much exactly what we talked about in the trading room. It likely happened today. And in fact, I'm going to brag a little bit, really sort of call these areas out as the places we would most likely trade. So certainly inside of yesterday's ranges, or the prior day's ranges, and probably between the confluence. We had confluence here from our price guides. Not too hard of a call there, but it's always harder to make money off of calls like that. I'm going to take you through my thought process, and I did make a little money today, not as much as I thought I would make. But before I get into that, I want to first talk about what tomorrow may bring us. Now, technically, my worksheet, which is sort of like a cheat sheet looking at different unique patterns and unique elements that may be in play, as well as averaging up our 8 individual gap guides. That which will be live here in the next hour or so, around no later than 6 p.m. Eastern Time, will not show an inside day in the markets because it has a more conservative definition for an inside day, in that an inside day technically must have a lower daily high and a higher daily low. Lower daily high and a higher daily low. It certainly has a higher daily low, but today's high was 1705, which was identical to the high on Friday. So we'll fill that definition, which means it will not show up in the worksheet. But for all intents and purposes, this was an inside day trading-wise. So I want to show you the results of fading gaps following an inside day, and specifically when you've had, as I've described, an inside day on the heels of putting in at least a 20-day high. I tested 200, sample size a little bit too small. It gave the exact same data, just you'll trust and I'll trust the bigger sample size more. So let's look at inside day following a 20-day high made in one of the past 2 days. Inside day after a 20-day high on one of the past 2 days. And here you go. And by definition, above the 10-day moving average, and also the limitation of it must be above the 200-day moving average. So I excluded sort of bear market scenarios. Sorry, folks, I had it run, but accidentally turned it off. I had to rerun it. There you go. All right, so about 50-50 in terms of which way we're likely to gap tomorrow based upon at least this particular scenario as I just described. Using an end-of-the-day stop, not something I recommend, but a good place to start your analysis. It does clearly show a short bias in terms of win rate, right? Using an end-of-the-day stop, significantly higher percentage, 78% of up gaps have filled by the end of the session versus only 63 for down gaps. And equally, but more importantly, the average size winner when compared to the average size loss is greatly skewed in favor of the shorts, not the longs. So clearly a short historical bias. I'll rerun these numbers for our members in the morning using our MTG stop parameters just to confirm that this is indeed a tradable scenario, right? Because we could have unusually high volatility occur after such a scenario, and this up gap may not look quite as attractive, but we'll see when I share these numbers with our members in the morning. All right. Let me show you what we had posted over the weekend regarding today. I'm going to go straight to today's worksheet, which summarizes the 8 individual gap guides. And today there were sort of, mid-sized down gaps, I guess you'd say, between the prior close and the prior low. So technically there are 2 zones here. A gap which we call down in the UCO zone between the close and the open of the prior day, or between the open and the low. Now today all these gaps I believe were between the close and the open, which tend to be better than this number shown here. You have to dig into the gap guides to confirm. So you can tell it wasn't off the cuff terrible, but it wasn't overly compelling either. Now, in terms of unique day factor, today's the 5th calendar day of the month. Tends to be a really unusual day historically, and riskier for actually gaps in both directions during bullish markets, as shown here. And then following monthly jobs report tends to be a weak day for trading down gaps. So those are 2 pretty significant concerns. Not the largest sample sizes you'll see, but still a little bit concerning on the heels of an overall neutral setup. But I'm going to show you the guides real quickly. And following an NR 7-day, not a big deal. So where do I want to go? I want to go to, the gap guides. Let's go to the gap guides. And for today, opening between the close and the open, this UCO zone that I just mentioned, between 98 and 1704 in the ES, historically an attractive setup, though a little bit weak on Mondays. That did catch my attention. I always pay more attention to seasonality here, which represents primarily day of week, especially on Mondays and Fridays, which are unique days. So good there. As Dow was slightly attractive, didn't quite meet my profitability requirement. I'm looking for 1.3 here. Same with NASDAQ, didn't quite meet my profitability requirement. And again, Monday's a little bit weak. Monday's a little bit weak. And then Russell showing some significant weakness, especially on Mondays and 3-day patterns and market conditions. So that was concerning. Looking at the ETFs, which I always look at. Spider confirmed what the ES showed. Good data. Diamonds looked okay. Qs looked okay. But Russell didn't. So basically, 4 out of the 8 indices met my criteria, but the two Russells did not meet my criteria. Really detracted from it. The Monday factor was pretty weak on most of these as well. So I tended to give that more weighting in my mind. Coupled with the data I just showed you in terms of down gaps on Monday post jobs report, and following, what was the pattern? It wasn't the NR7 pattern. Jeez, I'm forgetting. Sorry. Oh, the 5th day of the month. That's just too much for me to get excited about trading. Yes, I could have traded a speculative trade, but decided to pass on it. Here's what I posted. Let's see. The weekend tip was really pretty neutral for down gaps. So overall, slightly attractive historical data, but mostly negative factors for fading down gaps today from the worksheet. So overall, just a neutral setup. Not terrible, not compelling either, so I'll stand aside at the open. Now, when some of our long-term members that hear this, they get they don't turn me off immediately. In fact, the key to success is in incorporating me and our data, I should say, into your trading plan. When they see a neutral setup like this, it's not bad. They're just going to use a little extra caution, and many of them will delay their entries. So today that would have worked beautifully. Some of our folks did that. Some will wait for weakness and then wait for it to close back above the open. There's several different emails I got today. They got in long and caught the gap trade. I did not. I stood aside, waited for the 15-minute range guys. They weren't clear and certainly didn't favor the long side much, so I just left them alone. In fact, if anything, they favored the high fade. I just know the setup had too many positive factors. I wasn't going to do the high fade, and the data wasn't strong enough anyhow from our guide. So I waited. We had confluence around this gap fill, meaning potential resistance. Market internal was a little bit weak, and I did not fade the gap, which means by definition this met my fade the fill criteria today. So I did set up a fade the fill, called it out well in advance, and went short at 1704.50. That was right at the 4 p.m. close, and that was pretty much a beautiful entry point. Scaled out plus 1.5 points for plus 1.5 at 1703, and my second target was, drum roll, 1699.50. 1704.50 minus 5 makes it 1699.50. The exact low right there. In fact, let me show it to you. It was a 15-minute low. See, 1699.50, down about a third on that. Several of our members were very excited because they caught the low of that move. And surely they thought I caught it. I did not. Kid you not. So third trade in a row for me that I've actually been buffaloed, like to a tick. Now the good news is I tightened my stops, managed it down to where if it broke higher than 1703, 1703 at the end of the day I was going to be out, and that's what happened. Cost me a little bit of money there, but I got plus 1.5 points. I'd also tightened my target to 1704.50. So I missed the middle part of the day. That's why I didn't do anything before then. Plus I really try to leave it alone. Just, again, some rotten luck, and that happens, unfortunately. So good call, good trade, made a little money, just not as much as I'd hoped. And otherwise, that was the only thing I did all day, trading-wise. So y'all have a good one. And there you go. That was my day for Monday, August 5th. Take care.